Tesla is the best performing stock right now on the S&P 500. In fact, it's trading at near 6-month highs. This after sales for the second quarter didn't fall as much as feared. Yes, this is the second consecutive quarter that they have seen sales decline from previous year's benchmark. Quarter over quarter, they are finally starting to see some growth. Nevertheless, our next guest is not chasing the rally here. It's David Traynor, the founder and CEO of New Constructs. David, I guess this is the era that we're in for Tesla, where sales not falling as much as feared is a good news story.
Yeah, this is the new normal. I think we're going to see the same thing with margins amid a slowing sort of general demand for electric vehicles. And then, of course, huge increases in competition. And I think, we got to go back to what Elon Musk said not too long ago. The stock's not worth anything without full self-driving. This is not an automobile business or a competitive automobile business, or at least as a growth story. So it's show me time for the robo-taxi, for the robot, humanoid, whatever they call that, solar panels, batteries, all that stuff. I think Cybertruck's been a flop, so that's not really working out. I don't know what Rabbit's going to pull out of his hat next, but I think the market's starting to get tired of all the distractions.
Well, is it? Because it's rallying. It's at this 6-month high, and it looks like it's poised to recover.
Yeah, it's down quite a bit from its all-time high, that's for sure. And yeah, we have seen a little bit of a rally here recently, but we've seen a rally in everything recently, right? I mean, what hasn't rallied? So like even Roaring Kitty and meme stocks are rallying. So I don't necessarily consider that based on anything relative to the fundamentals, except that we're really in a really speculative market environment again, which while sexy in the short term and exciting in the short term, really just leads to more risk in the medium and the long term.
Well, let me counter it a different way, that long term, maybe medium term, this is the more attractive story, this shift towards electric vehicles. And they're dealing with these short term issues that they are dealing with. They've cut jobs. They are focused on the bottom line in the midst of a slowdown, which is what you'd hope, I guess, a company is doing. Not that they cut jobs, but that they are looking to preserve their margins, that they are doing the things they're supposed to be doing.
Yeah, but I mean, the valuation implies that they're going to have like 50% of the electric vehicle market and produce like 25, 26 million vehicles by 2030. Even Tesla itself has admitted that they're not going to make the 20 million a year annual vehicle production. So the point is here, like the valuation is giving the company credit as an automobile company, or if you want to say the automobile company is not worth much, then you got to give it credit to all these other businesses. But even then, the credit already baked into the valuation, or the implied cash flows baked into the valuation, are extraordinarily high. I mean, you're talking about a revenue that's almost twice what the combined revenue of Apple and Microsoft are today. So, the valuation has always been silly. It's always been disconnected from fundamentals. And this, the biggest surprise to me is really that, we see the automobile business literally falling out of bed. Like it's not just decreasing rates of growth, it's declining. And we're beating a number that's so beat down that is it really a beat? And yet people want to still argue that the valuation has got upside. I think all the upside and potential for whatever business that Tesla, Elon Musk may be into is already more than priced in.
I guess, what the other way of looking at the valuation's always been silly is that it hasn't been a reliable predictor of where the stock goes over the long term.
Yeah, I guess that's right. You can say that about any stock, and, who knows what the predictor is. And look, I'm not here to say that fundamentals need to be 100% of what people do, but if it's 0%, then, you're playing with fire, you're speculating. And that's by all means, that's fine to do. But just understand that's an enormous amount of risk to take, because, if and when the music stops for Tesla, and I believe it will, you're looking at a stock that's probably, maybe 25, 30 bucks. So there's an enormous amount of downside because of just so much future profit growth already baked in at the current levels. At 230 bucks, you're talking about extraordinary profit growth required to justify that.
I guess the question I'm asking is, if not Tesla, then who? If you do want to bet on a pure play EV company because you do believe that this is going to be the car of the future and all these, legacy companies are also slowly pivoting to that. I mean, is Lucid, Rivian, those are even more, of a basket case.
I would bet on one of the incumbents to do what is most important in this business, and that's deliveries, manufacturing, right? Tesla can't get the deliveries back up. They were able to get them to spike a year or so ago, and they can't maintain. So scaling production is something that Tesla has proven incapable of achieving time and time again. He's been, it was overpromised for years that production would increase, and it's never really achieved the goals it was supposed to achieve. And it's giving up on its long-term goal of 20 million cars a year. And now we're at a point where, well, maybe we don't want that many anyway, right? So, yeah, I would definitely focus my investment on stocks like the incumbents, especially GM and Ford, who've got the diversification in their product line to sell hybrids, internal combustible engines, right, and EVs. I think that diversification is going to prove to be the biggest advantage. In the same way, the omni-channel delivery of goods has proven to be the best. It's not just online, it's not just bricks and mortar, it's omni-channel. We've seen that prove out, and we think the same thing is going to happen in the automobile industry. And I would add that the decline in electric vehicle demand, I think strongly supports that thesis.